what's good? We're going to testing. Alright, bet. Alright, so we are good. We're gonna actually hop into, let's see. Let's go to I should have definitely did this before I hopped on. But we all good, so let's go to interact. Turn this light on. What do we think? Light on. Light. Oh no, light off. 110. 110. Alright. I'm gonna go ahead and send this so we can share it, and we're gonna go ahead and just get started. So basically what I'm gonna do is we're gonna walk through the setup that I sent last night, and then we're gonna do some live trading here. The 4 hours 905, so the 4 hour candle just closed, which means we can expect some a continuation. Right now I'm looking for buys for EUR USD, but we'll dive into it, so give me 1 second. All right. Let's go ahead and get started. Alright, so we're taking a look here at EUR USD. We're going to move this up, and this is what I'm looking to trade today. So we're going to remove drawings real quick here, and we're going to dial up to the 4 hour time frame. Now I will get into a breakdown of the trade that I took yesterday, the entry, the exit. I actually sent this setup to the Telegram, so I'm gonna get into that. But first, since this 4 hour candle just closed, I want to break down the actual move that we're gonna look for today and look to trade here on my funded accounts. So we're taking a look at it on the 4 hour time frame. The previous 4 hour just closed bullish. Now we're at that key resistance that we had mentioned yesterday, where we were looking to take profit on our buy trade, which I will break down shortly. But we hit this level of resistance here. At this level, we've seen a sign of rejection, a move down. We got to take a look on the smaller time frame, and then we started to get a bullish spike. Overall closing with this current or the previous 4 hour candle, shall I say, bullish. Now let's take a look here on, we're gonna dial it down to the 5 minute, and then we're gonna go to the 1. So on the 5 minute time frame here, we know that the previous 4 hour candle just closed bullish, just slightly bullish, but we had a lot of volume in the 4 hour candle prior to that was in the bullish direction. So you can see that we started to get that move last night, or I guess you could say at 1 a.m. this morning, of that bullish move to hit that targeted resistance that we were looking for yesterday. And again, I'll break down why I was looking for price to go up to this level of resistance, the actual trade I took, things that we could prove on going forward, X, Y, and Z. So, but what we can see here is that we got a high created, a break of that high, a correction, and then a continuation. We got to push back down, retest it back into this level of demand here, and a continuation to push up. Now it broke this previous high. This is an impulsive move. This is a corrective structure move. Why is this an impulsive move and this is a corrective structure move? Is because of the volume, the amount of volume. Price is in a bullish trend. We already know that price is rejecting off of a bullish. Let's go on a larger time frame. And this is what was sent to the Telegram last night. So when I made that video last night explaining where price was at currently, it was this 4-hour candle had just closed and we were at this key 4-hour level of demand here. So not only is volume starting to slow up to the downside, because you see we had a lot of volume to the downside here. Not only did the volume begin to slow up, we got to push down, but now once we reach this level of demand here, we get a bullish 4-hour candle to close. So the thesis was that we would see a continuation move up to retest back into this level of resistance. Excuse me. So we already know that we're anticipating the wave that we want to trade to be bullish. Price is in a bullish structure, and if we look at it on, let's say let's go back to our 5-minute time frame there, because we can see it quite clearly on the 5-minute time frame. You can see that price is creating higher highs and higher lows, as we mentioned earlier. Now, where is price at now, and what did price do? So we had a high get created here, a correction. A new high get created. When price broke out for this new high, the place that I would be looking for a potential entry or for price to retest is back into the level of demand that started for that bullish push. And that's what we've seen here. So you can see that price impulsive move up. So we have an impulsive move, high volume move. The overall trend we're anticipating to be bullish. We got an impulsive move up, a correction down, slow and low volume. And what I mean by slow and low volume is it took roughly 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Let's be generous and say 10, because it took 10 candles to push up and create this high, and it took well longer than that to just correct this move to the downside here. And after we tapped into this level of demand, we then see another bullish spike. So how price reacts is two separate ways that we look for price to react to get an entry. So let's say price is in a bullish trend as it is. Sometimes if we have high volume, we can see just a retest and a continuation going forward, similar to what we've seen happen here. So price had this high that it had created, a double top, and then we seen price break this high, and then it just retested this level here, and it got that continuation. And then you also have a move where price will not just retest this level, but pull back all the way to your key level of demand. And we know that our key level of demand can be found on different time frames, but what we're anticipating, what it is the first starting bullish candle of this wave that created the new high. So, and I'll break that down shortly. So price can come to that level and then continue. So two types of entries. One is coming down to the demand zone, and another one in high volume, at high volume times, a retest and then a continuation. We generally see this type of retest when we have some type of news that comes out that makes for a high volume bullish move. Price will have the strength, I guess is how you can look at it, to pull all the way back to this level. There's so much volume, price wants to continue driving up forward, but it has to form some type of correction. Price can't just go up forever. So what we've seen as far as this demand zone is similar to what we see right here. Price pushes up, we come back down to a key level of demand here, the starting bullish candle. This is what I mean by that starting bullish candle. The starting bullish candle above, that started for the this push to this high up here. So we got a new high get created because we got a correction and then a break of this previous high. New high get created, and then it corrected all the way back down to that first starting bullish candle. And then that's where we've seen price react off of that level. An entry model would be entering price here with a stops below this low, and then you would target the high for price to continue, or as we know, this larger time frame target, which is where we were looking for price to go anyways. But this particular trade I didn't scale into because I was not awake. This is 3 a.m. for me, so I went to sleep at like 11 o'clock last night, woke up at 4 a.m. So this is not a trade that I was looking to enter, but this is how the model essentially works. We have entries where price will retest in this level, and you have to dial down to the smaller time frame and scale into this trade with the entry here, stops below there, or you can still do a safer stops below resistance. And like with the other one, we would look for this to target this larger time frame resistance or this area here. Now, one thing that I like to make sure that I do is that if I get a trade that's running in profit, 1-to-1 risk to reward or above, we are going to go ahead and move stops to break even. So as soon as we start to see this volume in the markets, we're going to move stops to break even. We're going to go ahead and potentially secure some at key levels. And there's certain key levels in the markets that you want to be aware of, and one common example is a trade that was taken today by my brother. He was looking at a move to the downside here. He'd seen that price had just tapped into our key level, and then after tapping into our key level, we started to see a change of character form. Price on the smaller time frame creating lower lows and lower highs. And so his entry model was a corrective structure trade. So there's two types of trades that we can take. A continuation, which will generally give you your higher risk to reward, and a continuation is in the direction of whatever the larger time frame trend that you're looking to trade. So for us, for instance, yesterday, the trade that we were looking to enter was a bullish trade. So in the direction of that previous 4-hour bullish candle that had closed. So we're anticipating price to continue pushing up, similar to how he was anticipating price to push down, but on a smaller time frame within this corrective structure. Now, where he went ahead and took his entry was on the 1-minute time frame. He's seen that we had our change of character. Price came back up, retested, came back down, created this low here. When price pushed up into these levels, this is where he went ahead and took his entry for a continuation. Now, or for not the continuation, to hop in on the continuation of this corrective structure. It's just a scalable entry on a corrective structure, on a larger time frame corrective structure. And so one thing that we did is he did executed nicely is he seen his entry, executed on the entry, seen a scalable entry, didn't execute on the scaled entry, but was looking for a price to continue pushing down even longer. But we have to know what the overall time frame is. If you're in these corrective structure trades, it has to be a shorter time frame trade. So these are trades that we're looking to take our entry and take our money quick, because at any moment, I don't mean at any moment, but specific areas, and I'll mention the specific areas, price can flip into the direction of the larger time frame trend that we're seeing. And at the time, the previous 4-hour candle had already closed bullish. So it's an anticipation that this corrective structure, low and slow volume, would just be the bottom wick for the 4-hour candle to then flip bullish, which is why you want to be more aggressive with taking profits when price reaches certain key levels. And that key level being that key level of demand that we were talking about there, where we seen price got a bullish reaction off of. Now, what did we see and happening now? What is the next trade? How do we scale in going forward? Well, we just got a strong reaction off of our key 5-minute level of demand. Now, keep in mind, our 4-hour time frame just closed bullish. So we're anticipating throughout this session, and plus we're rejecting off of a key level here, that we could potentially see a steeper correction to the upside. Now, where can price go? We'll dive into that on a smaller time frame, and we'll start to look at the structure. But all we are thinking about now is that we want to see this current 4-hour candle close bullish and potentially with some volume there. So if we're thinking that this 4-hour candle is going to close bullish, where is the best place to get an entry? Where is the best place to scale in? Well, for one, anytime, I'm not going to say anytime, but there, because this is specific, but a rule of thumb would be within this bottom wick as price is making the bottom wick. So generally you want to scale in before price in fact turns bullish. And how can we see this is where price would, this line is indicative of where price would turn bearish. Now let's dial it down to the smaller time frame, because the smaller time frame is where we're actually going to scale into the trade. We're going to execute on our position and so on and so forth. So price was in this downwards corrective structure, which we know we have a larger time frame bullish trend. So what do we want to see? Well, price broke out, created a new high. So this is a new high that has been created. And what I want to see personally is now a corrective structure to pull back all the way into this key level of demand. And why is this my key level of demand? Well, this was the first 5-minute candle that started this bullish wave. And now keep in mind, the 4-hour time frame previously closed bullish. This line right here is indicative of where price, where that 4-hour candle flips bearish. Now, where we want to get our entry would be somewhere likely between this range of the bottom of this candle here to somewhere in here. And it's more likely that price goes ahead and pushes all the way back in here, right? This is where we want to see on the smaller time frame our bullish reaction. So if price just goes up, then price just goes up. I don't have an entry. But for me to be able to take an entry on this trade, I need for price to come to this level of demand, and then I need it to close bullish. After it closes bullish on this 5-minute time frame, I can then take my entry at this level after the candle closes bullish, and I'll set my stop loss below that bullish candle low, and then I will go for price to target these highs. Now, why I'm looking for price to target this high is specifically because price is in a bullish trend. We just came to a key level of demand here that we're getting a bullish reaction off of. That's why we're starting to see this spike, because price is in, like we said, in a larger time frame in a bullish trend. So this is basically, this is what I like to refer to it as, is this is my premium zone. So this is your premium zone. This is where you'll get your best entries and your best risk to reward. And it's a higher probability trade. Now, we talked about the two different types of, I think I deleted it, the two different types of entries price has. You have the one to pull back into your level of demand, and then you also have your retest when you high in volume. The retest is less probable, though with the right market structure, is still a successful trade, but it's it has a lower probability chance than necessarily something of this here, where we come down to those key lows. You get a full-on corrective structure and then a continued bullish push. That is a higher probability chance trade, and that's why I'm willing to sit and wait for price to push down. If it goes up and breaks this high, then from there we'll just look at the structure on the larger time frame. Price is pushing up, pushed down, pushed up, that's a new high created. I'll still look for price to now come back to this level of demand for a continued bullish push, depending on how much volume we have in the markets. And here in the US today is Labor Day, so we don't have a ton of, or we don't have any news essentially for today, but we have a high volume week in terms of the different news events that we have coming on this week. We have, I believe, PMI data coming out this week on Thursday, and I have a video dropping on PMI. And then we also have NFP this Friday, as this is the first week of the new month of September. So we can expect some volume to be in the markets this week, which is why I'm not pressed to just force a trade. If price comes down to my premium zone, then we're going to execute on the trade that can give us a generous risk reward of like a 1 to 6. And even if we were going at the safest mark and setting stops below this level here, we can still look to get about a 1 to 4 risk to reward depending on how that candle closes there. And so that is what I want to be patient on. And all I'm going to do now is just literally set an alert for when price gets to this area. And then when price gets to this area, that's when I'll know that it is time to take an entry. So EURUSD entry location. And then what I'm also going to do is I'm going to set an alert up here for if and when price breaks this high. Add an alert. New 5-minute high. Now, why I want to have this alert here, just in case, is because if price does just go without me and break this high, I want to be notified that price broke this high, and that way we can start to look for potentially, depending on how volume looks, and if we get a change of character in this area, a continuation retest play, like we mentioned. But if not, I want to be notified when price comes down to here to this 5-minute level of demand, and that way I'll know that I can potentially take my entry, higher probability trade for that continuation for price to break the 4-hour high here, so we can see it on this time frame. And that'll be a 1 to 4 trade, and then I will call it a day, and we'll go from there. And what we can see here on the smaller time frame is just what's happening. So what is happening on this smaller time frame? Price pushed up, came down, broke this high. Price is in a bullish trend. Then it came down and broke this low. This is indicative of a change of character and why we could potentially see ourselves getting a steeper move to the downside to come back into that retest level that we're looking for. So this is a good sign that price could push steeper down into this level here. And let's go in and break down the trade that I actually took yesterday and the move that I sent to you guys yesterday. So because it's one thing to understand a trade direction, it's another thing to be able to get the right entry at the right time for that trade direction. So I'm going to just remove everything that isn't an alert. Okay. I can move that too. All right, so let's take a look at it here. So, and let me see if there's a way before I do this, if I can pull it up on Telegram. No, it doesn't look like it. Okay, so let's go to. We'll just break it down. There we go. Okay. So yesterday, and specifically at this time, so after this current 4-hour candle close, so we're gonna pretend like none of this stuff is here, none of these 4-hour candles is here. After this 4-hour candle close, and we had tapped into this key level demand, I sent out a setup, and the setup looks something similar of this. I pushed up, pushed down, and then a continuation up for price to retest this level where we actually have our resistance at. And specifically, I said to the chat, so I sent a video. So if you didn't see the video, it's okay. We're going to break it down anyway. But I said in this video, we dive into the next moves I'm anticipating for EURUSD for this Asian session. I'm looking for a correction to start on EU, ultimately resulting in a bullish move during our current session. I'll be keeping an eye out to scale into that bullish move within the next 4-hour candle. So Now we're going to put together everything that we talked about today, about the continuation play, the correction play, just what we spoke on as far as a change of character and being able to see that steeper move to the downside that we wanted to see for a continued bullish push up based on the smaller time frame. We're going to see it all come into play right now. So I was looking at this. Price had just closed bullish, so let's look at it on the 4-hour time frame. This was our 4-hour close up here. Boom. So let's go to the 1-minute time frame. And I was looking after that 4-hour candle closed. You can see that, hold on, let me draw it out for you real quick so you guys can see. And it looks cleaner on the 1 or the 5-minute. So this is what happened. Price had broke this high, right? It broke out of these highs, and that's why we've seen this 4-hour candle close bullish. It closed bullish at this candle here. Excuse me. So price closed bullish at this candle here, and then after we wanted to get in on that continuation move. Now, a lot of times in the markets, we can see price form, and then we got to go to the smaller time frame so you can see it. On this 1-minute time frame, you can see prices forming higher highs and higher lows, right? There's times in high volume where we'll get a break and clear of these key lows. You can see price has been within this smaller time frame bullish trend after coming off of that 4-hour bullish candle. So it's all based on the larger time frame. So sometimes in the higher volume times, which is the Asian session, New York session, London session too, specifically for EU. And I trade Asian session on EU in order to capitalize on a potential London move. I'll get into more of that in a second after this breakdown. You'll start to see. So we got to push down to wipe liquidity. When price wiped liquidity right here, I went ahead and took a buy right after this candle closed bullish for a potential continuation. Now, couple of things here that I'm going to get into. One, when you're trading EURUSD, it's almost impossible to have a 1 pip stop loss depending on what your broker is because of one thing called spreads. Now, spreads is basically the space between your actual execution and where you get tagged in, essentially. And when you're waiting for these candles to close, or at least on EURUSD, 1 pip spread, generally like your average broker will give you like a 1 or so pip spreads. You want to be around 1 to 2 pip spread. So you can get liquidated without price ever hitting your stop loss just by coming close because of that spread. So what I did for this trade, and generally when you trade on gold, you won't have to do this because the equivalence to 1 pip on EU as far as a move is concerned is the equivalence to, a 10 pip stop loss on gold. So it's a little bit, you have more room to play. So what I did was I used a 5 pip stop loss. And why I went with a conservative 5 pip stop loss, and it didn't have to be this big. Normally I would just set stops below set my stops below the low of the candle and continuation, but like I said, the spreads. And so I wanted to account for the spreads, and I also wanted to be able to hold this trade to my take profit, my full take profit here, which in turn was like at the time a 1 to 5 risk to reward. So yeah, this is my exact entry. So the thing is, I took that entry there, and then what I needed, and I was telling my brother this, what I needed to see for me to be able to hold and continue with this position is for price to break this high up here, correct, and then continue. And that would be indicative of a continuation. But what we seen happen is when price came, and I told him, because it was a if-then situation. So beforehand, and I was like, but if we don't see a break and we see a resistance at this level, and price is struggling to break this level here. And why specifically do you think I was thinking of this level being a particular place that price could struggle to break? Why? Because technically, in a technical sense, this is a change of character. Price breaks through these lows of price continuing of creating higher highs and higher lows. Then we get a breakthrough of these lows, and price comes to that starting bearish candle that started the break for this low. If price can't break that level and it shows signs of resistance at this level, this is a good sign that price is now going to continue pushing down and is going to break this low and continue down. And then where do you think price could likely go? Well, that larger time frame 5-minute demand zone that we've been mentioning all morning, which would be here. Why this area? Well, this was the start of our larger time frame break. You got to remember, the previous 4 hour did in fact close bullish. So we were anticipating that price will continue pushing bullish in the direction of what the previous 4 hour high volume 4 hour candle closed. But where could price reverse off of? Either the retest level, which I wasn't really at a retest level. This was more of a confidence trade in terms of seeing that liquidity being grabbed and wanting to see price break for the highs. But I knew the condition that if price did not break this high here and we started to see resistance, that we could likely see a bearish move down. Now, what I told my brother is that as soon as this candle has started rejecting and it closed bearish on this next candle, I went ahead and closed 50% of my position and moved stops to break even. Now, why did I choose to do this? So many times, so many times, and I like so many that I couldn't even count to you how many times I've done this. So many times I'll see that price does something like this, looks like it's going to reverse based on this structure. I'm not going off of a feeling here. Price broke a low, a key low, on the 1 minute time frame, retested a key level of supply, and then started to show signs of rejection. I've seen this play out so many times, and that's why I went ahead and closed 50% of my position, because I wanted to take a portion out. Now, that basically takes my trade from being a 1 to 5 to now, in terms of how much I risk, if it hits full take profit, a 1 to 2.5. And that I'm perfectly okay with, because now the probability of this reversing on me is higher, which is also why I move stops to break even, because there's no purpose in losing on a volume trade, especially or potentially good trade that you were in profit in and seen signs of a reversal. There's no reason for me to hold this trade, because I know that if we get some type of resistance at this level, price begins to reject, that we can go ahead and push through, and it'll likely clear through my stops. And there's so many times that I've just held trades after clearly seeing the reversal and would just hold them to stop loss, and that makes a negative day. So now what I've done, even though it was over break even, so I took the trade at $1,000 risk, looking to make about a $5,000 profit, as you can see. When I closed my trade, I closed at about $200. I was up about, I want to say $500. So I closed about $250, right? At this half here. Looking for price to now give me a 1 to 2, which would be about somewhere around, a little bit over a 1 to 2. So it had been about $1,200. $1,200 to $1,500 is like where I was at. So what I wanted to do is, I was completely okay with holding that little half and price potentially going in my direction or getting stopped out at break even. I already secured some, and I didn't end with a negative day. This, without that decision, could have easily been a negative $1,000 day. But being able to understand where to modify my position, where to exit at, why to exit, was able to save a day from being down $1,000 to actually being up $200, $250, which is okay, with the possibility of making, like I said, another potential. I think it was like a 1 to 3, $1,500 in terms of risk. you know, in terms of the amount of risk that I had, and it would have been risk free. So that is why I did that. But I also noted that when Price did this, that it was probably, and this is how I can improve going forward, that it was probable that we could see after this resistance and we tapped into there to take this trade for Price to continue pushing down. Target one being to break this low here. You can see how Price reacted after it broke the low, got a small corrective structure and a continuation, but an overall target of back down into that demand zone, which is how I could have, turned that situation from being what it was to something better. And I likely would have just taken profits here at this resistance instead of trying to milk this all the way down to the demand zone, because the overall larger time frame was bullish and we were anticipating Price to come back up to this level of resistance. We gotta look at it on a 4-hour time frame. To this level of resistance here, and that was, and Price did in fact go up after rejecting off of that demand zone, but I wasn't able to take the entry to scale into this larger time frame bullish position because I was asleep. And we think in a perfect world, we take that trade during our session, we get that buy move up, protected ourselves, and then scaled into this move to the downside and received a 1 to 2.5 risk to reward. You go to sleep, or if you don't go to sleep, the perfect position or entry, if I was been able to been awake, to scale into that bullish move would have been here, with a stop below the low. And like I said about spreads, I likely would have just let my stops sit below this key low here. And this is our key low because Price is the start of this bullish move. If Price pushes through there, then Price is no longer in a bullish structure and you can see it start to fall down. But if it does react and respect off of this level, then we can see Price go up to what our resistance was, and that is a high risk to reward trade at a 1 to 6. And then there's, like we said, scalable entries if in a perfect world you're up. Now I don't personally scale in more than one time, and if I scale in, it's likely at a 0.5 risk to reward. So if I take a trade at 1%, I'll scale in at half the risk than my first trade, and I'll also move stops to break even on that first trade. So now I only have the 0.5% risk of the scale-in trade with a potential gain. Now you're talking a potential gain of this would be equivalent to a 1 to almost 4 risk to reward in terms of how much I risk, because this would be the scale-in entry, and then a 1 to 6. So you're talking, let's just say on my account, I have a 200K funded account, and I actually only risk $1,000, which is 0.5. So this trade would have been a 0.5, which would have been $6,430, and this trade would have been roughly 500 times 4, which is like $2,000. So we're talking about an $8,000 swing on just those trades alone. And after this goes in profit and move stops to break even, this is now risk free. So realistically, it would only cost that re-entry until you get some type of move for continuation. And resistance, always at resistance is where areas of target to take profits depending on how Price reacts. So hindsight is 2020, but we are looking at this continuation move for Price to push down, and that'll be the move that we look to scale into coming off of the 4-hour time frame. But I wanted to just break down the trade that I was taking yesterday, and though I was right on the overall direction, I wasn't able to get the justified entry, though it was relatively, I guess you could say, a break even day. But I don't know if you call being $200 in profit break even. But how I went about the trade was good. Entry, good. Exit, good. Only thing that I would say, like I said, would improve on is taking that sell move to the downside, and going ahead and taking profits at that retest level. And why I would take profits at the retest level, we talked about at the beginning of the stream, because this is a corrective structured trade, and you want to take profits earlier on corrective structure trades. Continuation trades, you want to hold to your larger time frame target. But when you're taking those corrective structure trades, you want to go ahead and get out. And those are generally like session trades, those session trades. For other trades, if you're up during pre-London, you could hold this trade likely throughout the continuation of the whole New York session. And that's why we're looking to scale in for this continuation move. But those are trades in the continuation area where you can, take a trade and also look to scale in. I wouldn't really scale in on a corrective structure trade because it's just riskier. It's not enough volume, and at any moment price could flip into the direction of that continuation. And then you get to asking yourself which is better, trying to force this corrective structure re-entry or waiting for, the continuation play, which is what I opt to do. So coming off this 4 hour, previous 4 hour bullish, previous 1 hour nicely bullish there. And I just want to see that corrective structure to form. Now, if we're looking at this in terms of the 1 hour time frame, we have, I know personally because just how structure is, price pushed up, came down, this is resistance, and then it broke that high up there. Price came back down to that key level of demand. Let's go look at it on the 5. Probably can see it better. So price pushed up, pushed down, pushed up, came down to this key level of demand, got a bullish move, started to make a breakout, breaking these highs, because like we said, price was creating lower lows and lower highs. These highs get broken out in the 5 minute, you get yourself a larger time frame corrective structure. As long as we don't break this high, this setup for price to come back down to our key level of demand here remains valid. So price to come here, then we want to see that continuation up, get that bullish entry, and hopefully we can get it within this current live session time. But if not, no problem. We'll just go ahead and execute on it after the session, and then I'll have it sent to the Telegram so that everybody can tap into that as well. And I'll be making a larger time frame, or not a larger time frame, an additional video breaking down essentially what I just told you guys here as far as the trade. Sometimes you can be right on the idea and the direction, but wrong on the initial trade that you take. And it's all about, if then statements. Nothing is ever set in stone with the markets. It's always riding on if then statements. If price does this, then this. If it does this, then this. You want to be aware of what price can do and the two options and the options that you have, and then execute based on what is the best trade for said scenarios. What's the way to go about the best way to go about said scenario. Simply like with the trade yesterday, taking that profit early and not holding it to get stopped out, to utterly get stopped out was the right play. How could I have done it better is to scale in onto that move to the downside after the bona fide change of character for that continuation down, or for that correction down, shall I say, early profit taken. And that's all I could do. As far as the move to the upside, I didn't wake up until it had hit the high. Like I woke up at 4 a.m. Price is at the high at this point. So what we could do, scale in on that move to the downside. But my brother was trading this scalable move. It's a good trade. It was just a corrective structure trade, taking profits there. He ended up getting stopped out at break even. So it wasn't like it was, a loss, but just taking profits at that demand zone when price is in this corrective structure is always key. So just little notes on how to improve, and then we trade another day. You live to trade another day. You don't lose nothing. So it's as if it's equivalent to not trading, but it's better than not trading because you actually get some type of value out of whatever the trade is that you took. Being that you're not just taking trades blindly and not caring about, actually looking and reviewing your trades. You got to be interested in actually reviewing it. But in terms of, that's all I would say. That is all I would say. And sorry if you've been or somebody's been messaging in the chat. I cannot even see the chat. The chat is tweaking out on my YouTube here. It says YouTube refuses to connect. So I don't know what that's all about, but I can't see the chat at all. So I haven't been able to see it the whole session. So if you guys have been saying things and I haven't seen it or replied to it or responded to it, I apologize. You can drop me we're not in Zoom. So you can drop me a message on Telegram. It's linked in the description if you have any questions, anything you wanted to talk about, anything like that, you feel me? But I just can't see the chat right now. Hopefully by tomorrow's session, this will be, resolved. But as of right now, I got nothing for it. So it's only 12 minutes left that I'm gonna be on here, and then I got some great things planned as far as content, man. I'm telling you, I plan on doing something different than all the other traders in this industry. But I'll speak more and more on that later since whoever is here to give you insight. I want to document just my journey, the real of what trading is. I don't want it to be this flashy thing. I don't want to be a meme page. For the Culture FX, the whole purpose of building For the Culture FX was to display and document my journey into trying to become, or into becoming, shall I say, a successful, high value individual. What are you growling at, dude? Sit down. But so in terms of content, the like I have a video being released after this. I have no idea what he's growling at. I have a video being released after. Actually, when we wrap up, it'll already be posted. So you can go over and check that out. It's about the one thing that you need in order to trade that, is all generally overlooked, but we all, what are you looking at? Bro, calm down. I don't know if he's seen something or what. But the man is tweaking. So let's take a look here at gold. Gold, nothing really crazy going on as far as gold, but let's take a look on the larger time frame and we'll go from there. So previous daily for gold, fact, closed bearish, and it's likely, we can see that it would be a continuation for that bearish move. What was important about gold is that gold had, if I'm not mistaken, broken out of a kilo. So what it did here is it pushed down with volume, closed with volume on Friday. We had this move to the upside, but it was likely that price would go through and break these lows here. So this low, price reacted off of, and then it formed a correction and continued, broke through that low. That was plausible, and it's still plausible that price, because it's still in a bearish trend technically, because essentially the start of this bearish move that broke this kilo is up here. So as long as price doesn't break this high, price is still relatively bearish, and it's more likely, and I already had this zone here, that price just reacts off of a key level of resistance here, a previous key low, and then that's where you start to see your potential continuation. Where could we see a potential continuation to would be down to this level here. Why to this level? Well, this is technically our key level, and we could even see price break through this level here potentially based on our current structure. Now I am biased to gold breaking these highs up here. So I believe that gold will come back through, breaking these highs. And for me, I'm not more inclined to selling gold, at least currently, as I am to just selling EU or buying EUR USD. But our current structure for gold is bearish. More recently, price broke through this low, broke through this high. So we're in a currently, we know that price was going down on the larger time frame. If we take a look at, like, let's say the 4-hour time frame, we broke through this key low here. So let's say we're in our corrective structure phase of that larger time frame move. Price broke above this high, you got a correction back down. We could see a continued bullish move for price to correct steeper up. Now it doesn't have to do this because it already formed a correction and rejected off of a level of key resistance. Price can just continue pushing down. But since we've seen this change of character here, this high, there's a chance that price can react off of this level of demand here, not breaking this low, and then you see in a more immediate, shorter time frame move to this upside up here, and that will give us a larger time frame correction of this move to our key level of demand, which is the start of the bearish move that broke through this low. So putting everything that we talked about literally together to construct what price could do, and if it doesn't, you know, how you go forward. But I am personally waiting for EUR USD, and whatever time this happens is just what time it happens. If price pushes up here like how we're seeing, and we just start to see breaks of these highs, so we got a break of this high up here, or well, not yet, or technically, but if we get a break of this high here, that is indicative that price is continuing up. We may look at this demand zone here for a potential scale in entry if price is in fact super bullish. If price doesn't break this high, we start to see a rejection, then definitely looking for price to continue and make a steeper move to the downside, retest back into our key level of 5-minute demand that we're looking for, and then we'll look for that buy move to the upside. You can target levels of this high here, which would be our key high, and then our overall larger time frame target. So literally the whole time we've been in our session, we just been within this range here. Unfortunately, but after the session ends, if and when I get my entry location or my entry move, then it'll be sent to the Telegram, and the description and everything with it will be sent to the Telegram as well, so there won't be any missing out. Yeah, see, gold on the 1 minute looks good to potentially be bullish. So yeah, I would ask if there were any ending questions, but like I said, I cannot see them. So if you do have any questions and you want them answered, I'll be free to answer those questions for you. You can just send me a message in Telegram. The Telegram link, the free Telegram link is down in the description, so you could just click that link, shoot me a message if you need be. But and so in closing, I say be on the lookout for this potential move here, and be well. That's pretty much it. So it's about 9:56. No reason to draw this out any longer. So I'll see you guys tomorrow in tomorrow's screen.